I'm joined today by Candice Blackwood and Stefan Voss from CMS. Thanks very much for joining us. You've recently published a report on care homes. Just tell us a little bit more about that, but also why the industry should be looking more closely at the sector.
Richard, thanks very much and for this opportunity to have this discussion with you. It's very topical. As we all know, the demographics show an ageing population throughout the world, primarily in Europe and the UK. And the statistics over the next 50 years look like we're going to have 50% of our population being supported by fewer numbers of working adults. So care homes are critical for our future.
I totally agree to Candice. In particular for Germany, we have some kind of a baby boomer generation. And I think this generation will retire in the next 10 to 15 years. And I think it's expected that until 2030, at least 200 or 250 care homes have to be constructed just to keep to today's quality of requirements in the near future. And for Germany in particular, it's another situation for investors. They look to this kind of asset class as it's a bit more secure than other ones. So it's partly refinanced by social security system and by healthcare insurance system. And that's quite a stable income situation for the landlords. And something we also see or have seen in the past few months is that many fund managers and international REITs are quite interested in this kind of property. So Edifica from Belgium, Catella from Sweden, Cofinimo also from Belgium, Patricia, Primonial, ICAD from France, IMAC, Aviarent, Swiss Life. So it's really a very big interest in this asset class.
Yeah, it's been interesting to see the growth in interest in that sector. And are you seeing that also globally, Candice?
Yes, absolutely. I mean, the US REITs started investing in UK healthcare about 8-9 years ago. And they were the first. And they've been followed by, as Stefan said, all the big pension funds and Belgian and UK REITs as well.
And one of the interesting things I think around this is that often both, operators, investors have seen the complexity of regulation as an issue for that. Stefan, what's the position there in terms of Germany?
Well, in Germany, I think the regulation is more complex for the operators than for the investors. The main legal issue would be that in Germany, in particular, we have a specific care home regulation in all 16 federal states. That makes it quite different for investing in portfolios which cover properties which are located in more than one federal state. It's a very complex issue which needs to be observed by all investors. In particular, there's another issue from the federal state law. It's that the contractual relationship between the operators and the occupants is stipulated by one specific law. And so there's no room for negotiation of all the clauses. So you have to really be compliant with this law. And I think for investors, the regulation is in particular interesting because there are also, and again, 16 different construction rules for nursing homes in the federal states.
Yeah, I mean, that complexity seems to be across Europe. And what did the study find, Candice, in terms of the UK markets?
Well, there's 3 main regulators in the UK. It's not quite as complex as Germany. There's the Care Quality Commission in England. There's the Care Inspectorate in Wales and the Care Inspectorate in Scotland. They operate similarly, slightly different regulations, but not to the level that Stefan's describing in Germany. However, it is important for the investors as well as the operators, because the investors invest in the real estate, tend to lease the premises back, and the operators have to be registered with the different regulatory authorities. Care Quality Commission in England. So it's important that, for instance, if a business is not performing and an investor requires to step in to the lease, that they explore other options to ensure that the patients living in the care homes always have regulated care providers looking after them.
And Candice, obviously, supply and demand, one of those key areas for this, particularly from the real estate and development sides. Firstly, I suppose is how recent is the research? Is this something that you've been gathering during the crisis? And also, what does it tell us about the kind of supply and demand dynamics?
The demographics are heading one way, as we said earlier. And I think the other thing that's of interest is people are generally in the West being better looked after in terms of long-term chronic conditions like diabetes or multiple sclerosis or asthma, severe asthma, etc. So therefore people are living longer. And the care home population actually is much people are having to be looked after more. They're being admitted later into care homes and living there perhaps 18 months, 2 years, with perhaps a number of issues that need nursing care. Whereas 30 years ago, 20 years ago, people were being admitted to care homes and living there actually quite happily in what was known as residential care for perhaps 5 years. Whereas I think the market is now moving in a different direction. There's care homes for complex needs or dementia in particular as people age. And then I think the younger population, the 60 to 80 population, are looking at alternative living in the form of retirement care.
Yeah, it's really interesting to see how the different types of requirements have changed in terms of this sector, and particularly that look at dementia care, I think. And in terms of patient funding, that's obviously a big element here in this particular sector. What are you seeing there in terms of Germany, Stefan?
With regard to funding of the operators, this is highly regulated by the national care insurance system. So there's a quite complicated mechanism which requires special contracts between the operators and the local care insurance bodies, so-called Pflegekassen, and in which, for example, for inpatient nursing homes, the amount which will be refunded to each occupant per day is determined. And a part of this refund or of this payment is dedicated to the investment costs. And that's the main figure investors are looking at, how much investment cost is the real value or the real figure for each nursing home, and that's the basis for calculating the rent. So it's not the calculation of rent by square meter as you know it from other asset classes, but it's always linked to the investment cost portion. And as far as an occupant cannot pay the investment costs, the social security system steps in. So it's always made sure that the operator is paid for the services, and the part of the services is related to the rent payments. Funding for the investors, it's as we have seen, quite complicated in Germany. There are not too many banks, or not all banks do really finance such kind of healthcare assets. However, there are banks which have in-house departments which are really specialized in this kind of properties, and they're in principle very happy to finance healthcare real estate. However, it's sometimes difficult because some of the large operating companies request and require a certain in-rem security. So they want to make sure that if the landlord has to file for insolvency, that they still can use the property during the insolvency and afterwards. So that's sometimes a problem, that such easement in gross, which is to be registered in the land register, is in conflict with the land charge for the financing banks. So that needs to be negotiated and drafted quite well. Otherwise, it's really an issue to have the financing in place.
Okay, interesting. And Candice, what are you seeing there in the UK?
Well, in the UK, the care home individual clients are means tested on admission by the local authority. And there, as the report says, there are various thresholds, different ones in England, Scotland and Wales. But the reason for the interest from investors in this type of asset is the fact that it is effectively government backed. Either people are suffering severely and totally incapable of looking after themselves when the NHS will support, or they're at a stage where they can partially look after themselves but need more help, and that's local authority funded.
Looking at it overall, what should investors keep uppermost in their minds if they're looking at or thinking of investing in the sector?
Well, I think the key point would be that the investor should observe the local healthcare market structure. Because the one thing that the research showed that it's there's no single system all over Europe. It's also a very local market. There are different types of uses. For example, there are hospitals. It's assisted living, ambient assisted living. Then it's service living, sometimes as a label, then inpatient nursing home, outpatient care, sometimes mixed use properties. I think you need to collect some good advice or good advisors if you as an investor have not the sufficient resources in-house. And in particular, in Germany, the operator market is quite fragmented. Approximately 50% of the over 900,000 nursing home beds in Germany are operated by 400 largest operator groups. So it seems it's a very fragmented market. And the investor market as well is quite mixed in Germany. The buyers are international healthcare services and companies, family offices as well, and but also companies, and that's quite specific for Germany, that divide the properties or the buildings into co-ownership shares, which then are sold to private persons.
And Candice, how important do you see things like ESG in terms of the future trends?
No, I think it's very important, Richard, because that's the pension funds and all the big funds are now looking at ESG, and healthcare ticks all the boxes. It's environmentally, it's sustainable, and it's got regulatory governance. So it's a very important asset class on that front. And I think picking up on some of the comments Stefan's just said, in the UK, it's also a fragmented market. But we have seen over the last 30 years, 4 to 6 of the big operators who are operating large numbers of care homes. And again, throughout the pandemic, we saw those care homes get easier access to PPE. And I think the smaller operators are struggling a bit more with staffing levels and to cope with the additional cost burdens that post-COVID world will require. So we're expecting to see more consolidation in the market. And I think the important thing for investors to keep in mind is the assets, good quality, are highly sought after, and the covenant strength of the operators they're partnering with, because that's critical.
I think that's really, really interesting advice. Great to get new research coming into this area, because it's an area that is particularly lacking research at the moment. So really pleased to be able to discuss that with you today. Thanks very much, Stefan and Candice. Thank you.
Welcome. Thank you, Richard.
Thank you.